Hello, today is September 30th, Friday, end of quarter, end of week. 4:27 after the close. The weekend report title is Stock Market Dumping Before Good October Seasonality, and this is your weekend report. Hi, this is Jonathan Gurney, Portfolio Manager at Gurney Financial. This post is for informational use only. The views expressed are those of the author, Jonathan M. Gurney, that is me. This material is not intended to be relied upon as a forecast, research, or investment advice and is not a recommendation, offer, or solicitation to buy or sell any securities or to adopt any investment strategy. We're simply going over the moves we made throughout the week, keeping our clients aware of what we're seeing, trying to protect hard-earned dollars, and taking advantage of opportunities. We'll go over the key levels today. It was another ugly week, but we eked out a positive week, barely, and a positive month, more importantly, which is difficult to do given the market was down over 10% this month. So let's hit the charts. Okay, so here is the performance for the week. Not necessarily terrible, but a lot of this was today. 1 second, let me shift screens here. There we go. So S&P was down 1.51%, was positive 1% at one point in the day. That's just the environment we're in. We're getting 2% swings a day. There's the week, and more importantly, there is the month. So we did have a positive month. This month, Gurney Financial, here is, you can see, like this week, even though I was barely positive, I was very, very active. I'm taking small trades at key levels and not allowing anything to go from green to red. So this is not a result of just sitting in cash and taking a small gain. This is playing very active and trying to participate because I do think we are basing, and I think we were very close to a bottom. And in fact, at the close, I did an MOC order, which means after the close, I forced myself to buy because the opportunity is there. And I want to take advantage of this. We're at a key level, the 35.89. Even if it goes down a little bit more, I'm not going to keep making the same mistakes by not having some on. I'll get run over to the upside if I don't do that. So learning from previous mistakes, there's the chart. The one day that really frustrated me was Wednesday, and I had zero control because the system was down. Schwab's trading system was down from 9:30 to 11, and in that time frame, it moved 1.5%, and I was not happy. So that was something that I had to just shake off. I was not happy about that because that's the move that I wanted. So that was very, very frustrating. Kept losses small and eked out a gain, and a gain for the month. So overall, we're hanging in there. I added about 30% at the close, which I think is the right thing to do because these are good key levels that I think need to be bought. At least some. Keep things small until a key level is gained. And that's the thing that we have not been able to do, is to gain a key level, regain a key level. So there's the indexes for the month. Here is the big 10, the core 10. And as you can see, nothing really pretty there either. It is what it is. Sectors for the week. Energy eked out a gain. The rest, not pretty. So again, I keep explaining this to clients to make sure they understand. Don't catch a falling knife. When one thing is going down, when the S&P 500 is going down, it's going to be hard to pick the areas that are going to do well. Cash is a position. Cash is a position. Short term. Okay. So I have no problem getting in and out, trying. I need to continue to do that. Let's take a look at the 1 month here. Jeez, it's not a good environment, period. It doesn't mean it'll soon get bought. We had a terrible CPI report again today. We bounced up 1%, couldn't hold the gains, and I'll show this to you. Okay, so the key level that I'm watching, we are at right now. Okay, we are oversold from that perspective. Where is the chart that I want to show you? Is 1 second, I'll shift gears because this is a really important chart that I am recognizing. It is right here. Okay, so this is the Fibonacci areas, the key support, the weekly on the weekly chart on the S&P 500, the 200-day moving average. We are right at 35.89 is right here. We're just below that, so that is key support. We'll see what happens, but you can see we're not quite oversold there on the weekly. We are oversold midterm, as you can see here. So here's the thing. The setup is there for bulls. They're just not taking it, and you have to respect that. So what I mean by that is the VIX is over 30. That's usually good risk reward. The RSI is under 30. That means it's oversold, but it doesn't mean buyers are coming in yet, because they're not. And National Association of Active Investment Managers, only 12.61% invested. The put call ratio today was 0.91% coming in. I mean, these are things that I'm looking for to potentially get a reversal. So I need to slowly start adding, is basically where this comes down to, and keep things small until a key level is regained. I want to see, and we'll shift screen so you can see this. I want to see, as you can see to the top right, I want to see get above 36.45. Now that would be a recapture, and it would probably go very quickly to 36.87 because most areas are oversold. And as you can see here, oversold. This is a short-term chart. So I think there is a little room to go down, as suggested here. Support levels that I'm watching. I ultimately do think that this may not happen until October, but seasonality in October is usually very, very good. We might have to respect that, and things could get worse and the market do well. And I think we're very, very close to seeing that happen. Okay. Buyers have to come in. We're just not seeing it yet. So I have to respect that and keep as much in cash as possible, but also keep some in case this thing moves. So overall, good month, okay week, protected where we needed to. Okay. So let me turn on the timer and we'll go from there. So we went over a lot of things already, but here is SPY. This is right at key support. So you can see on many time frames where we are right at key support. All right. So that is something good that I really, really like to see. One more thing that I really want to focus on is, in conjunction with this midterm chart right here, the midterm election chart, usually good things happen at the beginning of October. I hope we get a gap down tomorrow. I think that'll induce buyers to come in, and I think this could be a very nice little rally that we could get. We're following it to a T, and so until we don't follow this, it's hard not to respect it. And at some point, we're going to go off kilter, and this thing's going to rally like crazy, but we have to see buyers yet. So I could say that as much as I want, but we're not seeing buyers yet. So this would not surprise me if we follow this very closely. One more chart to keep you optimistic, because the reality is eventually this does get bought. The S&P 500 is down 8% in September, now 10%, as we just showed. So this is a couple days old. 2008 is in there, but other times it dropped 7% or more. Stocks have done well in October. So you can see September, this is now 10%. Good odds here. Average return 4.3, median return 7.1. Chances of being positive is 83.3%. Does that mean anything? No, not really. But it would not surprise me, because if we get buyers and this thing squeezes, because the amount of shorts on the table is extraordinary. Like, you're talking historical numbers. So once this thing goes, this will lead to good things. So I'm going to cut it off there. I don't think we need to talk about anything else. We survived the week. I have to keep taking shots and learn from previous mistakes. Overall, I like our positioning. So I'm going to go into Monday with about 30% invested at a very key level. So as you can see, across many different time frames, we are at support. Here we are at support. Here we are at support. Different time frames. And we are oversold on most of them. So you can see it's getting closer. All right. It doesn't mean it's a bottom, but you don't want to miss any of the potential rally that could occur. So gotta wait for buyers, and I don't add hard until we get a key level regained. And when it does, it's gonna happen fast. So you can see RSI is at 28 here. So the things that I want to see in a downtrend that could potentially be a reversal is high fear. We're over 30. That's a good thing. RSI is oversold below 30. That's a good thing. Put call ratio is extremely high, over 80. It's at 91 as of yesterday. And National Association of Active Investment Managers only have 12.61%. So basically nobody's buying, everybody's short. So once buyers come in, you can see what's going to happen. But we got to wait for that to happen. It's just not pretty out there, and you have to respect it and wait for buyers to come in. You can have as many opinions as you want on the market, but price wins. So there will be huge opportunity in time, but you have to be patient, and you don't want to miss it when it happens, because it'll be probably a 14%er in about 2 weeks. It's just the way the market works. So, and that could very well be an October thing. So overall, I think we're positioned the way we should be at this point, because we're oversold on many different time frames. It could go lower, and if it does, I keep taking shots and protect. So have a great weekend. We are okay. If you have assets to add that you're sitting in cash, this is not a bad time risk reward whatsoever to start adding. So remain optimistic. We will be fine. We'll get through all this, but kudos to Ryan Dietrich I want to definitely credit him for that information. It's good to remain optimistic during difficult times. So, and I'm guilty of that. So I appreciate his work. So have a great weekend. Appreciate you guys. Let me know if you have questions. Get outside, get some rest. I'm going to get off the screens, recoup, because you got to understand that these are 2 to 3% moves, each one of these candles. Okay. So the general trend, are we above or below the 5-day moving average? This orange line, pretty simple. We're below it. So we're trending down. We're below a declining 200-day and declining 50-day moving average. Don't fight it. That's where we stand. So keep things small. Have a great weekend. See ya.